Cool. Hi, I'm Barney Mannerings. I'm founder of Vega Protocol and happy to be here at REIMAGINE.
Hello and welcome to ReImagine 2021. This is our 8th conference in a monthly series of events bringing you nothing but the best projects, bright minds, and leaders in the space. We've been fortunate enough to invite many talented individuals and teams to come speak with us, providing updates, insights, and all the above that's happening in crypto. I'll be your host today, Adam, from the MouseBelt team, where we focus on early stage investments through our accelerator or providing development support to a number of growing projects, as well as education within our MouseBelt University program. Our main objective and goals are pretty simple. It's increasing adoption, use cases, and real-world applications. We seek to educate our audience on blockchain by helping them understand crypto's real impact. Again, thank you all for joining and tuning into the ReImagine 2021 conference. We're excited. We have a super cool interview today. Without further ado, I'll go ahead and introduce him. So Barney Mannerings, founder of Vega. How you doing today? Welcome aboard.
Hi, Adam. How are you doing? Great to be here.
Awesome. So I know it's kind of quite early in your neck of the woods. We're on opposite ends here on time zones. So we'll try to keep this short and sweet and engaging. So first and foremost, this is your first time at ReImagine. So would like to kind of just get your background on what you were doing previously to blockchain, and then what landed you in blockchain.
Yeah, so I was a computer scientist at university and ended up working in traditional finance, building trading systems and risk systems, working with banks, exchanges, etc. I kind of noticed some of the unfairness and some of the stuff going on in the way that system was built, and was always interested in the tech stuff. So when Bitcoin came along, I got a little bit involved there, got a little bit involved in the Ethereum pre-sale, and ended up kind of falling down the rabbit hole when I met my co-founder Ramsey, and we started talking about trading and derivatives again, and thinking about how to create a proper decentralized exchange for derivatives.
So did Bitcoin make sense to you? And when did you first come across, I guess, Bitcoin?
Yeah, I came across it in about 2010, and yeah, it made a lot of sense. It was super cool. As soon as I came across the white paper, I sort of went back and kind of looked back on the history of some of the other attempts to make sort of electronic money, and it made sense to me that people would want to do this, and it kind of seemed very cool that someone might have succeeded, and it wasn't clear they definitely would succeed at that point, but certainly made sense.
And coming from kind of traditional background, like when Bitcoin came about, was it like revolutionary for you? Like, this is going to be the future, and did you? And so how I see this is kind of understanding your background, right? Getting into crypto, and then we'll touch on kind of like the landscape of derivatives, and let's touch on Vega. So like the tech, could you separate the two? Was Bitcoin kind of its own application, killer app, and then the technology kind of came around in terms of I can leverage this thing and this is the future?
Yeah, it totally wasn't clear that decentralized applications and sort of blockchains for general purpose was going to be a thing. Bitcoin was clearly becoming a thing, and you could understand this kind of decentralized money. But there are a lot of people saying that no other chains would ever happen, and very, very maximalist approach. But also, the tech, the Bitcoin chain doesn't really support much else, and certainly it wasn't possible to imagine the world that we have now on Ethereum and Polkadot and all the others. So
yeah. No, that kind of spun up kind of later, and obviously post Ethereum and all that. And so, what's your thoughts? Going talking about decentralization, and what's your thoughts there in with decentralization versus centralization in terms of we have these maximalists that everything needs to be decentralized, and then right now we're too centralized. Where's your spectrum?
It's a really good question. I think you've got to understand why you're decentralizing something, and it is a good idea, I think, to decentralize sort of infrastructure people need to live, because it's a bit like communication. It's really great that we have Signal, because we can now talk to each other even if our government become oppressive and decide they don't want us to, and that's very good. And I think it's probably the same to have the ability to transact and trade, to do that even if the government prints so much money that you get hyperinflation or whatever else. So, or they want to stop you from being able to do that to sort of oppress you. So I think there are kind of fundamental infrastructures that it's good to decentralize, but then when you're building kind of businesses and applications, not everything necessarily needs to be decentralized on top of that layer. And it really probably depends on what you're doing and the use cases and whether decentralization solves a problem. And actually, looking at finance, it solves a problem because of the complexity of the regulations and because of the size of the institutions and the fact that they control so much of finance. There's decentralization also gives you this property that you actually have a chance of competing with really innovative new technology that you just couldn't have done. You can't build DeFi, and even though all the DeFi products could be built on centralized servers, but you can't do that in the centralized financial system. And so it enables innovation in this case. It's not really about censorship resistance. It's kind of a secondary property and almost for a lot of what's going on in DeFi right now. It's actually an enabler for innovation. And so it really just comes down to what are you getting something for your decentralization? Because if you're not, it's expensive and it's difficult.
Yeah, no, definitely. I think it's a fine line. I think on the public side of kind of crypto blockchain, the innovation is that's what provides the innovation, right? There was this discussion last couple of years of private versus public, and it's kind of depending on where you lie, who you work for, what you're doing. Private, DLT technologies work, but the innovation aspect kind of lies on the public side of kind of that boom. Would you agree there?
Yeah, that's for sure. Like the private side, it's quite often there isn't a use case. Actually, you're sometimes better off with a database. Sometimes it works on the private side if you're trying to coordinate, say supply chains across companies that don't mutually trust each other. There are some interesting use cases and maybe even in finance for private chains. But you're right, they're not really innovative use case. They're kind of problem solvers for some of that stuff. And the innovation in tech that's coming around, similar to kind of what happened with the internet and information, is kind of like the second wave of the internet, is the sort of the internet of value, and that innovation is all coming on the public chains.
Yeah, no, and I think blockchain is a buzzword, and we're going on over 300 interviews, and we've chatted with different teams, projects, technologies, use cases, and cryptography, distributed systems, right? The internet protocols back in the day, it's all kind of coming to fruition, and it makes sense that it's going to take a little bit of time to, I think mentally we're all very futuristic, progressive, and kind of see it. Technology wise, we're trying to figure it out. So what do you still see are some of the challenges or barriers with blockchain or crypto?
I think kind of integrating it into real world use cases. It's kind of sort of getting things in, getting money in and out of bank accounts and things like that is still not great with it. Just making it as easy to use as downloading an app on your phone and working with Stripe for payments or whatever. We're still not there in terms of that UX, and that means a lot of the use cases are still quite niche, and the sort of real world adoption is still only just sort of beginning to appear.
Yeah. And so, I've been talking to teams building that infrastructure, kind of like that one click, right? What we're used to, right? One login, not worrying about our seed phrases and private keys, which I had a great discussion earlier with Vault 12 and kind of how they manage this process for, to kind of get to the next 1 billion. So I kind of want to transition from this to what aspects of blockchain make sense for derivatives. That's such a complex, way of doing business in the financial world and the instrument. What made you look at blockchain and saying, you know what, this makes sense for derivatives, and why does it need to be decentralized?
Yeah, and there's probably kind of three things. The first simple one is kind of cost, and that's sort of related to the fact that the smaller players in the market, whether they're sort of consumers and retail trying to access derivatives products like spread betting or whatever, or whether it's small businesses trying to hedge risk, which is a major user of derivatives of small businesses, but they kind of access through these layers of banking and they kind of pay a huge amount of fees. So the first one is just simply cutting out some of that cost and going directly to the market and what can happen there. The next one is the innovation point, which is just the ability to spin up products and markets to fill a need without needing to go and convince the trading desk at Goldman Sachs or wherever that that's a good idea. And that, that will be a huge boost to innovation compared to what we're used to, and things will be able to move much faster. And then the third one is actually kind of risk. So, one of the things about derivatives is that they're margin traded instruments, and effectively that means that you have to put up money and hold risk. And you either have to have a custodian or you have to trust people with contracts, and you have to go after them in the courts if that doesn't work. And so, if you're a not very trustworthy entity, then you might have quite difficulty trading those products and setting up accounts. You can, and indeed we do at Vega, you can kind of calculate that risk and make allowances for it on the blockchain, and it can be very, very transparent what the system sees that risk to be and how it's being accounted for, and it's extremely clear to everyone what's going on. And that allows people to trade who otherwise wouldn't trust each other to trade, and it allows them to do it directly and peer-to-peer and to cut those costs. So the ability to kind of manage the risk in that way is a big advantage.
And we kind of just touched on like consumers, smaller players. Is this technology, and we'll talk about Vega a little bit more, but we can maybe highlight it here. Like, is this technology ready for institutions as well, like big players?
Yeah, and I think these things come in, the institutions will come when they think they can make money. And there's a good sort of related anecdote, I don't know if you're aware of sort of peer-to-peer lending, where there's these sort of platforms where theoretically you're lending to your friends.
Yeah.
But that's how it started out. Everyone's kind of lending to people like them based on their Facebook network and whatever else. But the big investment banks, the Morgan Stanley's, Goldman Sachs of the world, started to see these things and started to see the interest rates that people were paying. And we're like, hey, these people are paying a lot of interest. So we'd like to get in on this. So now something like 80% of all the loans on those peer-to-peer lending platforms are actually made by banks, because banks are good at pricing risk. So in fact, what happened is you created this platform that was open to everyone, but the best people to provide the liquidity were institutions. And that's going to be probably the first way that the non-crypto institutions get into this stuff, which is that they'll start seeing, and they already are in some cases, the crypto institutions, individuals and everyone getting in and doing stuff. And they'll start to look at the pricing of it and make their models and run their analysis, and they'll realize that they could make money doing this because they actually have all the expertise and all the maths and all the quants to do that. And so they'll come in to make money. And then they'll realize they're making money, and before you know it, chunks of the financial system start moving because it's more efficient. So it is sort of happening for institutions, and it is ready to an extent. But on the other hand, when you look at institutions like the London Stock Exchange or wherever and look at what's happening, are markets just going to move wholesale onto this like tomorrow? No, like the institutions will come in and see what's already happening. They'll start making money there, and then maybe things will move.
I kind of forgot about the peer-to-peer lending, traditionally like Lending Tree or some of these other ones. I used to work for the bank back in the day, and I kind of forgot about that. And then, that was basically peer-to-peer as well. You provide, liquidity or provide, capital, and then, I guess you borrow it on the other side, and you pick your rate, your risk tolerance. And I kind of forgot about that. That's interesting. And I think the underlying factor here is kind of just democratizing accessibility, right? Liquidity, capital. We should be able to operate amongst this peer-to-peer kind of, methodology that we're not used to, and we give up all of our info. We pay all of these fees, and whether, we think whatever, it's arbitrary, whatever the number is a good rate. I guess the spread really is for, the few big players, your Venmos and your limited opportunity to kind of like expand out of that. So do you think blockchain, in terms of like these financial, these financial instruments would have like not prevented, but maybe assisted in identifying some of the crashes in the past, like the 2008, or the complexities of transparency, providing transparency and all this stuff?
Yeah, I mean, it probably wouldn't have stopped there being crashes. I mean, if you look at the price of any major cryptos, you're not going to look at that and argue there wouldn't be crashes. I mean, it certainly isn't going to do that. But what it does do is where the risk is. Like everyone can see how much buying is happening, how much selling, how much money is held for risk, everyone can look at every single DeFi protocol. They can look at every transaction going out. You have people like Gauntlet putting reports and detailed quantitative reports on the risks in those things, and more of that will happen. So what it does is it lets everyone quantify the risk. And particularly like take it, for example, the financial crisis in 2007 and 2008, where there was a huge amount of crashing. And one of the big problems there was that all the banks had lots of deals with all the other banks, and most of those deals weren't collateralized. They didn't actually hold any capital for these derivatives. So they were all just trusting each other to pay. When it became apparent that no one actually knew if anyone else could pay, they all just got incredibly scared that no one could afford to pay each other back and that everyone was bankrupt. And one of the things that would happen if all those things were on blockchains is someone could run a script or an analysis tool. Someone could continuously be calculating how many of those agreements exist between everyone and how exposed everyone was. So whether it's a regulator or a bank, they would have had a much better idea of the position because the information is there. So I think, if it were all on systems like that, it would have helped because you wouldn't have had so much uncertainty.
And I guess it also benefits the government regulators, to identify these holes or these risks in the market. So the technology can also benefit them. I think a lot of people think about blockchain and they put it together with Bitcoin, which makes sense. But the underlying technology obviously expands into different verticals, industries. So I know Vega, like I heard you once say, like, I think at the time, Vega wasn't really, making money or profitable. And you guys had like other aspirations and motivations. Like, what's the motivation behind Vega?
Yeah, I mean, I think, we're sort of motivated to create this system and see it work and see it do things. And, obviously, having enough money to work on it is important for sure.
Yeah.
But I think, getting it to a point where it's live and people are using it is far more rewarding than getting a paycheck or, getting another $100,000 of investment or whatever it is. And so, I think the motivation is to see this technology. I mean, if you remember sort of when the internet arrived and how much innovation, how much excitement there was around building things on the internet and the possibilities, I think those possibilities are super exciting and motivating. And whether it's building things ourselves with these tools we built or watching other people do it, I think, putting those things out there and doing it and building this open source software in the community is very, very rewarding in itself. And I think part of that is making it a sustainable economic system. And obviously the advantage of crypto over general open source is you build an economic system as well as a technical system. And so, making that a sustainable economic system that can pay for itself to be maintained and built, and that rewards the people in the community who are providing value, whether that's liquidity or anything else, like that is an important part. But it's kind of the part of the motivation is also wrapped together in building this system that's kind of sustainable and will work for the long term.
And what is Vega? Like, what are you guys doing? Obviously during this discussion, for all the viewers tuning in, like, I kind of went down this path on purpose to kind of set the foundation on what Vega is doing, what you guys are building, the solutions you're providing, kind of the impact, you're making. Let's talk about Vega at its core. What's kind of the thesis? What's kind of the vision? And you've touched on it a little bit, but I'll condense it down into like, let's talk about, Vega Protocol and what you guys are accomplishing over there.
Yeah. So, I'll sort of compare Vega to a couple of things and to try and sort of explain what it is. And, obviously we talked about Bitcoin a minute ago. Bitcoin is kind of like the first money that's decentralized. And then Ethereum, if I could sum Ethereum up in one word, I would say tokens, effectively. Like, it has other use cases, but in reality, what Ethereum has become known for and become the place for is the issuance of whether it's NFTs or whether it's ERC20s. But if you want to issue a token, Ethereum is probably the best place to do it. So Ethereum is the token layer for the decentralized web. And then you have things like Filecoin and IPFS, which is like the storage layer for decentralized web. And Vega is the derivatives layer. Uniswap's the trading layer for swapping coins. Vega's the derivatives layer. It's the layer that lets you have these kind of margin products and these more complex financial products that have a lifetime. So instead of swapping a coin, you're entering into a trade, and now you've got a position and you're holding that position for an amount of time, and it has a lifetime and it gets valued, it gets margin, maybe it's leverage. Like, all of those things, they all require different problems to be solved and different maths and different technology, and trying to shove them into Ethereum doesn't work very well, which is why derivatives on Ethereum are not really all that good. And so people tend to use centralized exchanges. So the best thing to do is to just go and build a layer of technology which knows how to manage and trade derivatives. And that's effectively what we've done. So Vega is kind of the derivatives layer for Web3. Starts with things like futures, so the simplest leverage derivatives, the kind of thing you trade on BitMEX. And in future, it's kind of a very flexible layer for building any type of derivatives product, and in fact, any type of trading. But it starts with futures.
And are you guys built on your own chain? Are you built on Ethereum? What's kind of the tech stack you guys do?
Yeah. So we have our own chain, and it's built with Tendermint, the same the sort of consensus layer that's that's used for Cosmos. But we also, like I said, I believe that Ethereum is the place where tokens are issued right now. So the way Vega works is actually kind of Ethereum and others. I think Terra and Polkadot and some of the others are also doing good stuff where they're going to have assets that are valuable too. But what Vega does is it bridges to those chains, so you don't have to issue tokens on Vega in order to trade on Vega. What you do is you acquire tokens on Ethereum, ERC20s, and then you use the bridge that's built into Vega to effectively deposit those tokens on Vega, very similar to like depositing tokens on something like Uniswap actually, or into a centralized exchange. You deposit them, and then you can go and use them for trading on Vega. So Vega is very much part of that ecosystem and relies on things like Ethereum for the assets that are being issued, because we think it's better to kind of play nice like that rather than try and build a separate thing. But Vega is its own chain for the derivatives, because the things I mentioned, in order to do it properly, you actually have to kind of build quite specific technology.
And what does that look like from a consensus layer? Or obviously dealing with derivatives, there's a lot of moving parts there, but we talk about like scalability, like throughput, like customer, what kind of features maybe at its core distinguish itself from what was available. And then did you build this like from scratch? Were you on something else and you had no options, so now you had to build your own?
Yeah, so we started building it from scratch, or on top of Tendermint. So we didn't build the consensus layer ourselves. We took Tendermint proven code. We're actually making some modifications. So we have a protocol called Wendy, which is a fairness protocol, and that prevents front running and minor extractable values. So that's one thing we had to build ourselves, because we're kind of like, actually, it's unacceptable in trading to have MEV, and it's unacceptable to have front running as a built-in feature of your system. And you can't aim for serious trading to happen on a decentralized chain if it's going to have built-in front running. So that was kind of just one example of a thing we had to build. And the other things are things like on-chain order books, liquidity protocols, settlement layers, and just building those things to be fast and efficient and work well. And a good example, again, liquidation. On Ethereum-based DEXs, you have like liquidation auctions, which means that after someone's position should be liquidated, often some people have to come in from outside and cause the liquidation to happen in a liquidation auction, and that's a point of risk for the network, and it's a point of inefficiency. So in Vega, those liquidations are completely atomic. As soon as the event occurs that means the liquidation should happen, the network calculates that that's the case, and it executes the liquidation. There's no need for an auction. So just little things like that we built up. We built this chain from scratch on top of Tendermint. We're sort of a few thousand transactions a second right now. 10K is probably in the current sort of tech, 10K is probably going to be the limit per sort of network or shard. But the nice property, again, with Ethereum and sharding, you have this huge problem that every contract might want to talk to every other contract. So sharding is complicated and slow. With Vega, again, two markets don't need to talk to each other, right? Because you're trading some synthetic gold price, you're trading the Bitcoin price. Those markets are unrelated; they don't talk to each other. The Vega network needs to know how much of an asset you've got, which can happen in a sort of central shard, but the market shards that do the trading can actually be totally separate. So Vega is designed to be very parallelizable, so you can get sort of up to probably 10K transactions a second, but also as the network needs to run tens and hundreds and thousands of markets, validators can spin up more shards quite easily that just run more markets. So you have a huge amount of scalability very easily because of that property here. So there are a huge number of advantages of on the one hand, you're super constrained. This chain only does one thing, it only does trading. But on the other hand, because it's super constrained like that, you have a huge number of shortcuts and advantages that make it faster and more efficient.
And you brought it up a little bit, and you kind of just touched on it now, like interoperability, right? And bridges, like how important is that for your protocol, for the future layers, the layers beneath, and kind of how do you envision the future? Like you said, there's X amount of chains right now. You guys have built your own thing because that was important. Do you see kind of these main chains and then these niche chains, and what does that look like? And I'm assuming it's obviously critical for continued innovation, and then also just the flow of tech, in and out of these things.
Yeah, I think chains and bridges are important, and having bridges is going to be more and more important, I think, because I can't imagine a world where everything is sort of all in one place. And I look at every other technology, and it just doesn't ever work like that. There are many different types of database and many types of web server, and many types of even cloud providers. So it just seems very unlikely to me that everything would sort of coalesce around one or two in the end. I think there'll be a multitude, but I also think just like the sort of the underlying internet technologies, they'll start to blend into the woodwork, like whether it's the IBC protocol or something like that. Eventually what will happen is the chains will talk to the other chains, and it won't be something you're too worried about. It'll just be a kind of a known thing. And the main thing you'll be thinking about when you build an application is how secure is the chain. Is it a financial application with funds that need to be secured, or is it a decentralized application which is just storing like some amount of state data? What chain does it use? But I think bridges will eventually end up just being part of the scenery that just to make it all work.
And what kind of assets are actually like available, I guess, on Vega, or what what are they deriving from?
Yeah, so obviously the assets you can trade with will be any ERC20. So like you could trade with DAI, or you could trade with Ether as well, and any of the other coins on the Ethereum network, pretty much. In terms of the markets that you can trade with that, obviously Vega's in a testnet at the moment, and so there are a whole bunch of different markets getting created all the time. The way it works is that effectively you need an oracle to settle. So like, if you say that there's a Bitcoin US dollar market that matures on the 30th of September, then it's something you need something that's going to provide a price to Bitcoin in US dollars on the 30th of September. As long as you've got that, then you're good to go. And so, that can be anything from a weather derivatives market, so a market related to the average temperature in a certain place or the amount of rainfall. That could be the price of gold. That could be the Bitcoin hash rate. So it really can be kind of anything that you can measure and get the oracle for. And as I mentioned, this is kind of like futures markets initially. So they kind of settle once at the end of their maturity. So whether that's like 1 month, 3 months, 6 months, obviously you can trade in and out before then. The next kind of markets will be things like perpetuals or perps. So, the kind of things that you see, BitMEX, I think, pioneered, and, that's where they kind of settle multiple times a day and kind of true up, and they don't expire. So you get this kind of perpetual, so synthetic type of asset. Then there'll be options and other things in the future as well. So, really anything that you can get an oracle for, you can build a market on.
And so, talk about oracles. Are you partnered with any oracles, or how do you guys get your data feeds from traditional? Are you like into the chain links and tellers of the world and bands, or?
Yeah, so I guess sort of going back to the point I made earlier about being this kind of derivatives layer, in the same way Ethereum is a layer, and what we didn't want to do is kind of be exclusive to some projects. We didn't want to kind of go, you have to use Chainlink or something. So Vega has a framework for oracles, and it's got a sort of MVP version at the moment, which allows certain types of oracle. In future, will actually even allow oracles on the bridges. So if there's an oracle that has an event on Ethereum, you'll be able to just have the Ethereum contract ID and directly use that in Vega. So really we're building this framework to allow many different types of oracles to be used and specified, so that people can build their own, people can use other solutions that already exist out there. What we are doing is talking to a number of the kind of the usual names. Haven't got anything to share right now, but in terms of the oracle space, we're talking to a lot of those guys, thinking about doing things together in the community with them, thinking about creating markets with them, and demonstrating how their oracles can be used on Vega so people can see. But the general goal is to have this sort of wide framework and accept many different oracles.
And I meant to ask you earlier, like DEXs, decentralization and like centralized exchanges. Where do you see that future? And we might have touched on it at the beginning, where it's going to be a hybrid. And I think crypto blockchain is just going to provide an option, but I don't think it's going to, winner takes all. Are you kind of in that same boat?
Yeah, I mean, I think one thing that's true is within a market segment, and that can be jurisdiction, like geography, that can include like so like say in the US, and it can be like institutional trading, and it can be like a certain type of product. Within a segment, you do find liquidity tends to go to sort of one place. So there will usually be one or two winners for any given segment, but there are thousands of segments, so that's not really a big problem. I do think you're right. Like I think it will not all go to decentralized, and the reason is like making a centralized exchange is extremely cheap technically, and the institutions that can do it already exist. So it's very unlikely that banks and other institutions will just stop running decentralized exchanges, given that they're quite cheap to run. They might be forced to innovate or to reduce prices or something, but very unlikely that they'll just stop doing that. And I think it'll still end up being a solution in many areas. But for the areas where it's not a viable solution, or where it's currently too expensive or not available, or where new markets pop up and actually the innovation happens first on the ground rather than in the institutions, those things will start popping up in the decentralized space. And once they're there and established and very liquid in the decentralized space, it's also still quite hard to see outside of kind of niche applications from maybe very large institutions or something, or where the regulatory requirements force it to happen. It's also quite hard to see why, once the liquidity is there and then the systems are there in the decentralized space, why the things would move back into centralized. So I think you'll end up with a hybrid world for sure.
And you touched on 10,000 transactions. Is that what you're talking about? Like TPX? Is that
what 10,000 transactions a second is roughly the kind of the limit of the current version of the Tendermint consensus layer. And
to put it in perspective, like, how close are we to this centralized world and kind of, what we've been used to in these legacy systems, and maybe at a high level, on the crypto scene, how close are we, or how far are we?
This is a really interesting question. And for many markets, it's kind of very academic, because many markets are not all that liquid and they only have a handful of trades effectively. But the most liquid markets, and the sort of 4 or 5 most liquid markets on the London Stock Exchange, I think, do like something like 70 or 80% or more of all the trading volume. And those markets, you're talking at microseconds latency, orders, tens of thousands of orders going in and streaming in. But one of the really interesting things about that is, if you think about the different use cases of trading, you've kind of got people who need to access liquidity. Like maybe you're a fund and you have a view on it and you're trying to make money. Maybe you're hedging, you need to access liquidity. Then you have people who are supplying liquidity. You understand how to price the risk, you price the orders, and you make money being a market maker. Then what you have, people who are exploiting the microstructure of the market and the flash boys basically, and all of that. The people who basically trade in and out, they're not actually really supplying liquidity. They're not actually doing anything of social or financial utility, but they're exploiting the structure of the market to make money. So when you look at this, you're kind of like, well, we are far away because of decentralized system. It takes 300 milliseconds for a message to go from London to Australia. So you won't get to a microsecond in a decentralized system. But on the other hand, when you actually try and look at, in Chicago, Booth University did a great paper on frequent batch auctions, kind of demonstrating some of the ways you could actually increase the latency of centralized systems and make them kind of better. Because the low latency doesn't give any social value and allows people to exploit others. So when you actually look at it, we're not going to get to a microsecond. We can get better than we are. We can actually sort of cheat the 300 milliseconds by sort of having each block produced by a cluster of the nodes, which are all closer together geographically, and kind of randomly selecting different clusters. So you can probably get to like tens of milliseconds maybe, but you're not going to get to microseconds. So we're going to be far away from that, but it's probably not a problem.
No, interesting. I haven't had anybody kind of shed light on that, and so thank you for talking about that, especially with your background, kind of understanding like the nuances of these trading platforms and mechanisms. And to kind of conclude here, we got a few more minutes. Great discussion. This is an NFT themed event, so we just went kind of through DeFi, the DeFi boom last summer. Things are still picking up, right? Decentralization and kind of dApps, and it's been going great. Now we're kind of in this NFT boom. What are your thoughts there? I mean, there's kind of, I'll let you kind of share your thoughts, but ultimately there's different verticals, different NFTs, different reasons. I was talking about NFTs and DeFi colliding, right? In terms of like being able to collateralize that and borrow against it, blah, blah, blah. So what's your thoughts on NFTs?
I mean, the technology for a start is very, very interesting and useful. The simple and obvious way you can prove that is you look at things like the sort of unstoppable domain names, where actually your domain name is an NFT and you no longer need a centralized institution to issue it and censor it. So, there's an obvious use case for them. There are lots of other use cases, whether it's representing ownership, whether it's holding property in virtualized sort of metaverse games, whether it's any of those different things. But on the other side, there's kind of a crazy boom in the price of things. And one of the things I always kind of think is like, digital content that's completely free to copy is not worth very much. Like it's often easy to create, it's completely free to copy. But one of the things I sort of also think about is like, I buy a lot of t-shirts from bands, and they're basically the cheap t-shirts that cost like $5, but they cost $35. And why am I paying $35 for that t-shirt? Well, I need clothes, but I could buy the cheap ones, but it tells people that I supported that band.
Yeah.
So, I think a lot of what happens in NFTs is actually a bit like that. You look at the Snowden thing, the person buying that probably doesn't really think that piece of art is worth that. What they do think is they want everyone in the world to know they donated $5 million to privacy charity. So, it's kind of like buying the band t-shirt, but to the extremes. And so I can sort of see where that's going, but equally, people get very excited about these things, and people follow in because they think they're going to make money. And so, you kind of get the speculative bubble come along with the realization of a new use case, and come along with people not quite sure which things are going to work and which aren't. So they get over exuberant. So there's a lot of stuff going on, but I think in general, the tech is extremely sound, but maybe not all of the use cases and all of the valuations that people are sort of pushing out there right now are gonna last.
Yeah, you bring up some interesting points, though, that to the analogy of the band shirts, because I was like that too. I bought the Rolling Stones shirt like there. I wanted to, that I'm gonna remember that has sentiment, has value to me. And I think in the NFT world, I don't understand a lot of it, but I could see those individuals that can afford it. They value it, and it's not always I want to buy the Mona Lisa, right? And for whatever reason, like, I think some people want to engage with, going back to the peer-to-peer thing, like the engagement, supporting an artist, a musician, whatever the case, an athlete, whatever the case, even your local band, I guess, with an NFTs, like they're going to be cranking them out. And I guess, that's for more of like, I'm supporting them as opposed to speculative reasons, right? Like hoping this thing turns into $1 million. I think you'll be let down if you go into NFTs thinking like, this is one of a kind, because you also don't own the copyright on certain things, which is interesting too, or the physical copy, or like, you own like this digital first receipt of whatever the case
exactly.
is.
I mean, in some cases they will end up, you will end up with contracts attached to these things where you do own the revenue or whatever. It'll be like a revenue share, like, hey, you fund us building this album, you get a share of the profits, whatever. Like, sure, that will happen, but I think in general a lot of it is just this kind of the signaling and supporting. Like, I don't know if you use Bandcamp, but I buy albums from my favorite bands on Bandcamp, and when I do that, you can kind of name your own price, and there's a minimum, and I often put more than the minimum is. And it's because that this band doesn't make that much money from Spotify, right? It's you want to give them some money because you like them making music, so you give what you can. So I think that side of it feels the most reasonable to me, because you don't have to worry about a valuation and supporting it when you literally own nothing.
And NFTs do bring that residual, revenue stream in perpetuity, possibly, and also a lot of these musicians are making money not on their music, and so that's kind of critical in terms of what this technology can bring to them. So they can earn on, get the respect and earn on what they worked hard for. So it's kind of interesting. And I think the NFT landscape, I think it's going to play out, because you can own real estate, and, school books is another kind of like application of, like selling school books or whatever for the publisher. Maybe that drives down costs too. I'm not sure, but I think, what kind of music you like?
I like quite a lot of different types of music: electronic music, post-rock, probably the two genres I listen to most.
Nice. I know. A lot of these artists and DJs, I hope it's not like an ICO thing, right? Like a vehicle to kind of raise money. Maybe it is, maybe it's not. Hopefully it's not as bad. I think on the ICO front, that was kind of more of a gambling, like super risky move to just invest potentially in a white paper and a potential product, as opposed to I'm supporting my local musician, artist, or whoever. So hopefully it doesn't end badly, and it rebounds pretty quick. But I do hope that it does drive value for these various industries, that it's all, major players that are extracting a lot of the value there.
Yeah, for sure.
So I think we're up on time here, Barney. It was a pleasure speaking with you. Where can people learn more about Vega?
So Vega.xyz is our website. Links on there to Discord, where we hang out and talk about technical stuff, Telegram for some of the other side of things as well. Those are probably the two places if you want to sort of ask questions or get involved in the community. Otherwise, website at Vega.xyz.
Awesome, awesome. Well, we hope to have you back, at least somebody from the team again, to kind of catch up with you guys in the upcoming months. Everybody that's watching Reimagine 2021, we appreciate you tuning in here. This is Barney Mannerings, founder of Vega. Again, thank you for taking the time to chat with us. We hope to have you back, and we'll see you soon.
Thanks, Adam. Great chatting, and I'll be back for sure.